Ladies and gentlemen, good morning. It's a real privilege for us to be here with you today. And what I would like to try to do is, in a few minutes, deliver you perhaps a slightly different perspective on this environment transition. I'm not going to talk to you about what we should do, but I'm going to talk to you about really what's happening in the real economy and why, as investors, it really matters. Because ultimately, this very profound transition which we are facing is going to be first and foremost, for some of us, an investment return discussion. So let me start by things that we all know, and I don't need to dwell too much in it. We are in the middle of a very profound environmental crisis, but it is not only about climate change. It's actually about a number of planetary systems that are on the verge of collapsing due to human activity, due to our economic activity, and it is a major problem for our economy. Why? Because the very structure of global GDP relies on healthy planetary systems. But there is a good news, and the good news is that we have today, there is a transition framework, and a transition framework that is backed by science. And this transition framework is articulated around three major system changes, plus the pricing of environmental externalities. First, on energy, we need to move from effectively 10-20% electricity in our energy mix to about 70 to 80% between now and 2050. Secondly, on land and ocean, we need to stop expanding our agricultural land, and in fact, we need to rewild about 20% of our agricultural land between now and 2030. That's within 6 years, and that's 1 billion hectares of agricultural land. And thirdly, on materials, we need to reduce the material intensity of our economy by 1/3 between now and 2030. And of course, we are putting a price on carbon, and it's happening across the world, including in Thailand, with a compliance market, and we are going to live in an economic structure where you will have to pollute, to put carbon into the atmosphere, you will have to pay for it. Now, when you put all these changes together, you come very, very quickly to a very simple conclusion. This is going to be the most profound economic transformation of all time. Way, way bigger than the Industrial Revolution. We're going to have to basically change most of our economic structure. It's also quite important to bear in mind something important, which is that, like every single economic transformation which we have witnessed throughout history, it always happens very, very slowly at first, and then it happens very suddenly. So, these changes, they are always about better economics. When we move from the slow change to the rapidly occurring changes, it is always about the same thing. It's about cost curves, it's about efficiency gains, it's about scalability, and when we reach these breakthrough points, these tipping points, effectively we see a significant amount of private sector capital flowing into these changes and the move towards mass adoption. So what I would like to try to do today is share with you two aspects of this transition which we think are vastly underestimated. The first one is the speed and scale at which this transition is unfolding in front of our eyes today. And then the second one is the level of disruption it is already creating in the global economy. So, let me start with speed and scale. The other good news about this transition is that when faced with this huge environmental challenge, actually we have 90% of the solutions. 90% of the solutions are today available to basically shift our economy to net zero and nature positive. And in fact, another important point is that when you look at every single one of these solutions, effectively most of them are close to tipping points or breakthrough points, with some of them, like the building blocks of electrification, already moving towards mass adoption. And if we look at electrification, which I know we'll talk a little bit more about it today, we can see the example. We are basically creating better economics thanks to electrification. We've seen cost curves going down steeper and faster than anybody would have anticipated. And every single one of the projections have been exceeded. Electrified solutions today, both on the supply side and the demand side, the ones that are moving into mass adoption, not only are cheaper, but they are much more efficient. And that's the reason why we are now moving into scaling them very significantly, particularly on the supply side. Another reason why we are moving at speed and scale is undoubtedly the significant amount of policy support that we are witnessing, not only in the US with a very well-published IRA, but also in Europe and, of course, also in China, and that is really important. There is a third reason, which is also quite underestimated, is that this sort of new industrial revolution is really, again, a lot about technology. And what we are witnessing is a collision of new technologies that is triggering chain reactions that are accelerating even further these changes. And if we look at an example of the energy transition, it all started in the 80s with some breakthrough in materials. As we know, this has enabled effectively new technology around, new industrial technology around indeed solar PVs and wind and a few more. This basically created new business models in utilities with wind farms and solar farms, and that basically enabled breakthrough in mobility with electrical vehicles, e-bikes, and so on and so forth. You're creating this virtuous circle where effectively you have more of the energy demand that is starting to be electrified, you need more energy supply, and you're basically getting to this virtuous circle where the demand for renewable electricity is basically driving costs down, driving deployments up very significantly. And so we are basically into this situation today, which is extraordinary, which is that every single new electricity infrastructure on the planet, or 95% of them, is basically implemented through a combination of solar, wind, and batteries, not because everybody wants to save the planet, because it has become the best economic option. It's the cheapest form of electricity on the planet today. And the important thing as well is that this is where we are today, but the next phase is potentially green hydrogen. Why? Because what the clean grid does, it enables the deployment at scale of green hydrogen. Green hydrogen enables green steel, green ammonia, and these have the potential of, again, disrupting materials, shipping, fertilizers, and so on and so forth. So when we put all these together, we are basically coming to a very simple situation which we have in front of us today. We are faced with better technologies or better solutions which deliver superior economics, and then when we have this kind of situation in free markets, what happens? Private sector capital flows into it. And this is what we are witnessing today. In 2022, $1.5 trillion of private sector capital went into electrification or into clean energy. This number exceeds by a significant percentage the amount of private sector capital that went into fossil fuel. We think that we are, this decade alone, on course to deploy between 3 and 3.5 trillion in the electrification of the economy. And that is obviously very significant. And what we should always bear in mind is CapEx in free markets basically drives earnings. And we've seen it with the IT revolution in the last 20 or 30 years. And by the way, what we are deploying in green energy or in electrification is a similar amount which we have seen of private sector investment in the IT revolution. And we went from basically a sector that represented about 5% of the earnings of the global economy to 20% and rising fast, as we know. So let me now move on to the second aspect of this transition, which I think is vastly underestimated, which is the level of disruption that it is bringing into our economy. When we think about energy transition, we need to be clear about an important point. This goes way beyond energy. The transformation of our energy systems basically will change all of the business models that rely on energy. And we also have to be clear that 95% of our energy needs are concentrated around buildings, mobility, and industry. And we are seeing already how mobility today is being disrupted by electrification. It's basically bringing in new business models. It is reconfiguring entire value chains. It is basically creating new champions. It's moving profit pools from one segment of the value chain to another. It's basically having a huge impact. And I'll give you two examples focusing just on electrical vehicles, which is something that we all, again, witness in front of our eyes. Electrical vehicles is an interesting example because, first, we can think of Tesla, and it's always interesting to look at Tesla because this is a company that sells 10 times less cars than Toyota, but yet it's valued by the market anywhere between 3, 4, 5, or 8 times more, depending on the week. What is interesting with Tesla is it has completely reconfigured the value chain of the automotive industry. It isn't just selling cars. It's doing much more than that. It's tapping into multiple additional profit pools, which is probably why it's been so much valued by the market. In addition to selling cars, it's making money by selling batteries outside the automotive industry. It is also making money by generating and distributing electricity, which was not basically the normal hunting ground of automotive sectors. It's now even tapping into the real estate profit pool, and it's also obviously becoming a very big IT and technology platform. Tesla is no longer an automotive industry. It's basically a technology platform supplying electrified equipment, and that is the new value chain of electrical vehicles. Another example around electrical vehicles and how basically electrification is disrupting our industries. Look at what's happening in China. In 10 years, China has managed to build a 60% market share in electrical vehicles. Now, electric vehicles represent today approximately 17% of new car sales. We think it's going to go to sort of 70 to 80% by the end of the decade. And by the way, this is broadly a consensus. Now, whilst the European automotive industry was lobbying hard against electrical vehicles, China has built a dominant position in every single segment of the electrical value chain. They've used the domestic market to drive costs down, and we are today in this situation where the median price of a Chinese electrical vehicle is about $8,000, and you compare this to the median price of electrical vehicles in Europe, $35,000, and in the US, $33,000. Basically, China is causing today or posing an existential threat to the European automotive industry, and particularly the German automotive industry. And remember, it's a big problem for Germany because about 1 in every 7 employees in Germany is working directly or indirectly for the automotive industry. Now, when we put all of these aspects of the energy transition together, we get to this other level of disruption, which is not talked enough about. When we meet an oil and gas company, we're always asking them the wrong question, which is, when are you going to phase out from fossil fuel? And we get all sorts of really interesting answers. But the real question is, where is your business going? And the real question is when the market will actually reprice your business. We think that fossil fuel industry has entered a stage of terminal decline. We are absolutely convinced that very, very soon, the cash flows coming from fossil fuel capex will be discounted to zero. And then the real question is how the rest of the business gets valued. But the biggest question to ask to an oil and gas company today is explain us what is the future of your business model. Moving on to other level of disruption. This is not only about energy. This is also about nature. And basically, and we'll talk more about it this afternoon, but there is no net zero without nature. Nature is both a carbon source, because we emit 20% of our emissions comes from land use and land use change, but it is also, more importantly, a carbon sink. About 50% of all of our industrial emissions are absorbed by terrestrial sinks every year. So without nature, there is no net zero. Without nature, we're putting twice as much carbon dioxide into the atmosphere every year. What sits at the middle, at the heart of the nature issue, is food systems. 85% of the nature issue comes from food systems. And again, food systems, we believe, are at the beginning of a major disruption. This is 10% of the global economy, or $10 trillion roughly. And through a combination of different things, ranging from regulation, but again, new solutions, new technology. And in the food business, new solution, new technologies basically means same or better taste, same or better texture, and of course, better economics. And we think that effectively regenerative agriculture and alternative proteins will become to food systems what solar, wind, and batteries are and have been for the energy system. And again, moving on to another area of disruption, real estate. This transformation will also affect significantly commercial real estate. In fact, we would argue that commercial real estate, or a lot of commercial real estate assets, have the potential of becoming stranded as soon as 2030. And I'll just give you an example in Europe, but frankly, it's the same everywhere in the world. In Europe, we have 70% of the stock of commercial real estate, which is today brown. Now, as we all know, the tenants of commercial real estate are in the services industry. Services industry are banks like us. We have all made commitments to reach net zero from operation by 2030. 50% of the emissions of the services industries generally come from buildings. So what do we do as a bank? Like everybody else in the services industry, with these kind of commitments, we move from brown buildings to green buildings between now and 2030. At Lombard Odier, we have 26 offices in the world. We will be out of our brown buildings by 2028, and we will move into green buildings. The good news is that the rents in green buildings are not higher. In most places, they are roughly similar, because what's happening is the discount in brown buildings is starting to emerge and steepening very, very fast. That's why we think that commercial real estate could become a stranded area very, very soon. And moving again and staying on the built environment, we're seeing a new set of regulation and policy coming in the next few years around zero-emission new builds and also around embodied emissions. So we're going to effectively have to build with no emissions, and we're going to account for the embodied emissions of our new building. When this comes into place, it has the potential of severely disrupting not only the construction, but also buildings and the business model of buildings. To build, or to erect our buildings, we are going to rely on very different materials. And cross-laminated woods, by the way, has an interesting role to play. But the business models of buildings is also going to evolve. It won't be just about rents and tenants. It's going to be about energy distribution, energy generation, and it's also potentially going to be about carbon storage. So anyway, when we put all of these things together, and we could go on with the level of disruption that it is creating across the economy, but we're basically getting to a situation where, we conclude that effectively the economics of this transition are becoming real, and more importantly, they are becoming irresistible. And as a result, they are attracting this very, very significant pool of private sector capital. So in fact, we believe that we are at the beginning of a new investment cycle, which is good news for Europe and for the US, because as you can see from this chart, we've been lagging behind China for a number of years now. And this investment cycle is going to be about building effectively a new economy, a new green economy, which will have very, very different characteristics than the existing economy. And again, I won't bore you with all of the details, but I will give you perhaps one clue, which I think is really interesting. The new green economy is likely to have the benefit of cheap to very cheap to very, very, very cheap energy. And that's going to be quite interesting because, again, let's just think business models where effectively energy is really cheap. And remember, we have an infinite source of sun for the need of our energy, and basically transforming the energy from the sun into electricity is really about tech. And tech follows the Moore's law, so costs are going down and down and down. So we're going to build a very different economy with different characteristics, and we think that the structure of the GDP is going to change. It's going to start to change fairly soon, and it's going to change very profoundly between now and 2050. So, to conclude, at Lombard Odier, we are, again, an investment firm, and we are really thrilled and we feel privileged to be able to partner with KBank. But really, as an active investment firm, the reason we need to focus on sustainability is because we need to help our clients to navigate these changes. Because from a market standpoint, we're going to see new sectors emerging, we're going to see entire sectors disappearing, we're going to see benchmarks changing quite radically, we're going to see asset class, particularly long-duration asset class, at risk, and I've mentioned real estate or commercial real estate. We're going to see new asset class emerging. We'll talk later about nature as a potential new asset class. And again, this is really going to change the way that we deploy capital, which is the reason why we want to remain extremely focused on sustainability, and we think it's an investment return conversation. With that, thank you very much. Thank you.